month of April, they've not reversed, but they've not been great as well. In fact, domestic institutional investors have been net sellers in the month of April. So what is your view on global liquidity? You think that one-time adjustment which we saw because of the Fed change of stance, that adjustment is behind us?
See, I guess so, because you saw Jan and Feb a good rally in China, and then you had more money pouring in after the US Fed's dovish comments going into March and April now. So I think to that extent, for the time being, looks like that adjustment is over. I think we should not forget oil is now again rising to $75 odd or $74 odd dollars. Again, that is not good for the emerging markets in that sense. So if it sustains at this level or start rising further, then obviously it puts pressure on the overall economy of the emerging markets, and India also being part of it. I think to that extent, then the reversal of the flows can also be pretty sharp. So I think we need to be careful at this juncture. Don't get euphoric in this phase. Any which ways you are going into an election phase, you don't know the outcomes, and also the economy is not as great in growth as it was, let's say, before the IL&FS or a crisis. So we have to be cautious, stick to the few stories who are growing even in this phase, and be careful on the portfolio.
Okay. And in this wariness, Jinesh, where would you recommend profit taking, and where would you then recommend buying on dips?
See, classic stories to play for India. If you really see that country is going to grow at 6.5–7% for a decade, I think financial as a space is a good space to be in. Along with that, you have consumption play. Obviously, valuations are high, so you buy on dips. And auto as a sector has not been doing well for last 6, 7, 8 months. So that is where the opportunity can come once the numbers come, maybe two quarters down the line.
Sure. You've talked about a multi-cap approach as well, Jinesh. Just talk us through that, because in this market, if perhaps one is suggesting sticking to perhaps the safer bets or the larger caps, would you expand to the broader markets? Would you be selective? Are there specific sectors you're looking at? What exactly are you thinking of when you're discussing a multi-cap approach?
So frankly, at this juncture, large cap is more preferred versus the mid cap and small cap, and that is precisely due to the concerns around macro economy, which doesn't bode well for the micro economy. So when macro improves, I think that helps the micro to do well, and that is where the mid cap and the small cap companies' earnings growth are higher than the large cap. But at this juncture, though we have a multi-cap approach, we would like to be more on the large cap side of the story at this juncture, and evaluate very stock specific names on the mid and the small side.
How much more for corporate banks to go, Jinesh? Because that is the favorite or the crowded or the overrated trade in India. That, by corporate banks, SBI, ICICI Bank, Axis Bank, they will all see a big expansion in growth, and the market share lost to NBFCs will come back. I've not seen any evidence of that yet. But do you think this trade has a long shelf life?
It has. Now maybe that euphoric move is over, and now you will more on the normalized basis once company starts delivering a core growth number which would be in line with the other private sector banks which have been growing at 20–25%. So I think to that extent you should see there is more leg in terms of growth. Also please understand the route in the NBFCs is really changing the business model of many of the NBFCs, as I would have said earlier. So tier 2, tier 3 NBFCs will take its own time to come back. Tier 1 NBFCs have weathered this storm and they should continue to do well. But so there is a large space available for this corporate banks to now regain their market share in some of the retail segments where they have not been present or they have been not concentrating on. So I think there is more leg to go. Also, the TINA factor is in play. There are only few stories available to really play at this juncture, given the macro concerns. So to that extent, there is a play to play.
What is your sense on the way how flows could move? SIP flows are strong, but the lump sum flows have dipped down. Small cap funds are not getting any large inflows. Do you think that there could be a contraction in the flows, and for next 6-8 months, domestic institutional investors who've been the so-called ledge providers of liquidity to the market could see lack of commitment, lack of liquidity?
See, after demonetization, you had that euphoric money come into the banking system, and that money had to flow somewhere. And so we have also been the beneficiary of it. And you saw loads of money coming after that. Obviously, you cannot have money flowing to that extent, but the SIP flow of close to $1 billion plus is what the real sticky money and which is continuing to do well, grow nicely. Rest would depend on many of the events. As I said, you are into an pre-election kind of a month. Any untoward outcome will have a serious impact on the flows for the near term. Obviously, after that, oil is now hovering around $74-75, which will have its impact on the earnings and the economy. So to that extent, you are in this choppy waters, and normally investors don't like choppiness in the market. They want one-way trend, either up or down. So to that extent, I think till the time this volatility continues, choppiness continues, you will see some of the lumpy flows might not be around, or might some go away as well.
We both know that, Jinesh, elections will have a very short-term impact on the market. Both of us have looked at the data that market history and the Sensex history and elections are independent. At max, it could be a 5% event. It could give you a 15% volatility. So if the volatility is not going to be 5 to 10% or maybe 10 to 12%, why do you think everyone is worried? I mean, don't you think a fund manager like you right now should be using the current volatility or current nervousness to buy some bargains?
No, so you are right, but then generally if you see any high frequency data are not coming as great as you would expect in terms of growth numbers. You see passenger sales growth, CV sales growth, especially after the IL&FS episode, there has been a huge amount of liquidity crunch which has come into the system. So to that extent, all the high frequency data are not pointing out towards a good growth, at least for near term, I would say. So I think along with the election, you are also into a macro concern now, where numbers are not coming to the extent we would expect in terms of high growth momentum. So I think that choppiness, so let's say once election is over, the mood will shift to economy or the earnings, and whatever channel checks we are doing, at least at this juncture, barring large cap space, few good companies, we don't expect numbers to be very, very good. Maybe mid cap and small cap will further struggle in terms of growth. So to that extent, you need that momentum to kick in terms of earnings growth, where we can decide decisively that now it's time to buy all out in mid and small space. So I think to that extent there is a worriness. Economy is slow, we all know. Oil is high, so that doesn't bode well for a overall momentum in the market.
And that's just what I want to touch upon in a little bit more detail, Jinesh. Crude, how much havoc do you see this potentially playing, given the kind of spike that we're seeing on those prices?
Yeah, so I think hope it is near term and it further cools off. But then if it hovers around $80-85, we have seen India cannot take beyond $70 to $73. So obviously there will be impact. at some level in terms of demand destruction coming into play. Already you are seeing some of the demand indicators being slow. So to that extent, oil at this level further going up is not at all good for the economy like India. So difficult to predict what will happen, but then generally the tone which will be set will be more negative than positive.
Okay, Jinesh, great to have you on the show. Thank you much for taking the time out and speaking with us today.